Guys, welcome to Unisys weekly chart analysis. So first of all, as usual, let's look at the dollar index. So the dollar's 4-week candlestick were in the doji last month, and the price has been unable to break through this area. So we must wait for the price to have a greater momentum to determine the direction of the dollar. So the US dollar has been in a bear market since March last year, and the general trend is still bearish. But it should be noted that the price has jumped into the main support level in February 2018. Then wait for the completion of the weekly key line, the candlestick chart, next week before making a more accurate judgment. Right, next let's look at the euro against the Aussie dollar. So as for the euro against the Aussie dollar, the last 2 weeks has been in a reversal and oscillating pattern. And finally, there's a downward momentum after the completion of last Friday. So for next week, we can wait for the price to pull back to near 1.579 and then we enter the market. Then, if you want to reduce the risk, you can wait for a continuous decline pattern after the price correction before entering the market. Then you can arbitrage on the trend line below. Alright, next let's look at the pound against the Swiss franc. So while waiting for the price to complete the larger candlestick chart of the continuous bull market price pattern, so when the price reaches the 1.2595 area, we can directly enter the market. So for traders, for friends who would like to reduce your risk, you can wait for the price to have a small reversal pattern before entering the market. Okay, we can partly arbitrage at 1.302. And the ultimate goal is to hold a position to the main resistance level, which is about 1.328. Alright, coming up next, let's look at the pound against the New Zealand dollar. So for the GBP and NZD, after reaching the resistance level since October last Friday, it fell strongly. Then you can wait for the price to have a small continuous decline pattern. Then you can enter the market by going short. So we can TP at 1.3935. So when a continuous price pattern is completed and falls, we can directly put a stop loss point to our entry point in order to reduce our risk. Okay, lastly, let's look at the gold. So for the gold, we can wait for the price to enter the market after the third touch of the larger sustained bull market pattern. So it is estimated that the low of 1860 will not be reached next week. So we can wait for whether there is a reversal pattern when gold pulls back to the top, and then we can enter the short-term risk of shorting in the market. Alright, so that's all for today. Thanks for watching.